Hey everyone, it's Matt. So friends of mine, Jimmy and Morgan, recently paid off $200,000 in student loan debt in 3.5 years. Yes, you heard that correctly. $200,000 in student loan debt in just over 3 years. So once I was done getting my jaw off the ground, right, I basically had to ask them, hey, how did you guys actually go about doing this? And probably more importantly, what sacrifices did you have to make such that you can make this goal repayment process a reality? As I was trading some messages with them, what quickly struck me was the simplicity with which their plan was towards achieving this goal. Frequently, what happens is people create these overtly complicated plans, and the more complicated your plan is, the more opportunities there are to derail yourselves from achieving your goals. So let's get into it, right? Like, what is the plan? What are the specific steps that they basically took such that they could pay off the student loan debt so quickly? So the first thing that they did was immediately after they got married, right? They basically aligned that this was going to be a goal that they were going to have. What that basically does is a couple of things, right? One, it sets the stage that this is going to be an absolute priority for them. And the second thing that it also does is it creates a support system because they're basically viewing this debt not as one person's or the other's. They're viewing this as a combined goal. And when you have that and you have the support system right around you, it makes achievement of your goals more of a reality. So that's the first thing that they did. The second thing that they did was they started looking at their expenses, and they were pretty crisp in terms of which expenses they could get rid of. And the more expenses that they could get rid of, they could utilize that incremental cash flow towards whatever other things that they wanted to do, which in this particular case was paying off their student loan debt. So an example of what they did was they basically got rid of one of their cars. There is an underlying reason in terms of why they got rid of one of their vehicles was because their place that they actually live in, it only comes with one parking spot. But I think most of us can come up with numerous other reasons why we need two vehicles, right? And we can come up with numerous other avenues such that we can basically park the second vehicle, even though it does not necessarily come with our apartment or condominium. But the key takeaway from it, right, is not so much the car. It's basically the notion that they were willing to look at their expenses, figure out what they did not need, right, and basically utilize that free cash flow such that they can utilize it for other purposes. The other thing that they did in terms of just simplifying their lives, right, is they consolidated into one credit card. But what this basically does is when you have one credit card, it simplifies your life in terms of, how many avenues do you have such that you can make payments for whatever it is that you are basically getting. And it all comes out in one bill. You basically have full transparency into it, as opposed to having multiple credit cards, which for Americans is 3+ credit cards. So it brings a lot of transparency because everything is coming out in one statement and you have a clear visibility into what you spent on and how much your payment is actually going to be. The other thing that they did was they automated stuff, okay? So they automated the process for paying off their debt. Now, I know we talk about automating things in a variety of different ways, right? We talk about automating investments primarily such that, the money isn't even in your bank account, it's going automatic towards investments. You're not going to be spending that money for any other purposes. But the same thing can essentially be done for your debt as well. So automating things is a very good way such that not only can you pay your debt off faster, you can also invest money for your future. The other thing that they did over the last couple of years, right, is they got a bigger shovel. Okay, so one of the things that we always talk about, right, is that your single greatest wealth building tool is your income, blah, 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 right? We always say that, right? So if you have a bigger shovel so you can have more income, you can utilize all that money towards paying off your debts, towards investments, vacations, or whatever it is that you effectively value. The other thing that they also did was they looked at what programs their employer basically has. What programs does my employer have that could basically help me with respect to paying off my debts? Now, frequently employers have some type of tuition reimbursement or tuition assistance program. And what that basically does is it prevents you from getting into debt in the first place or as significant of a debt in the first place. But what some employers also provide is certain types of debt payment assistance type of programs, which can also be very helpful. So in this particular case, one of the things that their employers did provide for is like interest payments on your debt. Now, when you have something like that, you can imagine how significant that could be, particularly when you have a large loan amount, because at least in the initial part, a large component of it is basically going towards interest. So that was one of the features which their employer provided. So it's useful or important to talk to your HR departments to understand, hey, what programs are offered by their employer, by your employer, such that you can pay off your debts effectively as well. Now, just to round out this whole employer support bit a bit, right? So my friends, they did not take advantage of either of these because either of these were not into law. The first thing is the Employer Participation and Repayment Act. So the Employer Participation and Repayment Act basically sets aside some but $5,250 that can effectively be used towards paying off student loan debt. Now, you as the employee definitely have to keep your loan current and have to make payments associated with it, but this is some tax-free resources that are basically available that you can basically utilize towards paying off your student loan debt. The other thing is the Secure Act 2.0. Secure Act 2.0 basically allows employers to basically participate in matching contributions to employees on their student loan debt. So frequently employers have large funds which are basically go underutilized, and that money can essentially be used for this purpose as well. So definitely something that you want to talk to your HR departments. So if you're finding value in this video, definitely hit the subscribe button to the channel and ring the notification bell. In the end, right, these folks, they basically had about 6 steps that they took in order to pay off their student loan debt. The first thing that they did was they aligned on their goals and objectives and paid off this debt as a couple. The second thing that they did was they created a directional budget and were pretty firm in terms of all the debt or the expenses that they can get rid of, and that's that whole car example that I provided. The next thing that they did was they simplified their lives by consolidating the number of credit cards they effectively have such that they can track their expenses more simply. The fourth thing that they did was they automated everything. They automated their debt payment, they automated their investments, they automated everything, and the lesser the money that they could see in their bank accounts was the lesser that they would effectively spend. The next thing was they got a bigger shovel, right? They both switched their jobs over the last few years here, which has definitely been incremental or beneficial towards paying off your student loan debt. And then the last thing was they checked with their employer in terms of what programs that they basically offered, and then they took advantage of all of that. Now, typical student loan payments takes about 17 to 20 years, okay? And effectively utilizing some of these approaches could be very beneficial such that you can pay off your student loan debts a lot faster. So I hope you enjoyed the contents of this video. If you did, definitely hit the like button, and I will see you soon.